Welcome back to Shrouded Securities, where we brief you into the public filings of various securities to give you the important details on popular exchange-traded funds. I'm your host, Spooky, and today we're examining the Invesco QQQ Trust, one of the most widely traded ETFs in the world. Launched way back in March 1999, the QQQ aims to track the investment results of the NASDAQ 100 index, which includes 100 of the largest non-financial companies listed on the NASDAQ stock market. Think major tech titans like Apple, Microsoft, Amazon, Google parent Alphabet, Meta platforms, NVIDIA, and more. As of September 30th, 2023, the QQQ had a whopping $196.5 billion in net assets. The fund's top holdings reflect the index, with over 50% in just a handful of MegaCAP tech names. Apple alone makes up over 8% of assets, Microsoft at nearly 9%, NVIDIA at 6%, Amazon and Google around 5% each, and so on. From a sector view, the QQQ is heavily concentrated. Information technology dominates at nearly 59%, followed by consumer discretionary at 18% and communication services at 10%. This is definitely a tech and consumer-focused fund, with very little exposure to sectors like financials, industrials, or materials. One key thing to note: the QQQ is structured as a unit investment trust. This means the fund isn't actively managed and can only hold the securities in the index. When those index components change, the fund has to robotically buy and sell to match, even if it's not an ideal time. There's no manager deciding what to own. Expenses for the QQQ currently sit at 0.20% annually. That includes a 0.14% licensing fee to NASDAQ for using their index. This is fairly low for an ETF, though not rock bottom for an index fund. Part of that fee gets you the strong liquidity and tight trading spreads the QQQ is known for. With average volume over 55 million shares a day, it's super easy to get in and out. So who might consider investing in QQQ? It could be a way to easily get exposure to the returns of big tech and the NASDAQ 100. Just remember that concentrated tech approach means the fund will be more volatile than the broader market. The QQQ fell over 32% in 2022's bear market, for example. On the other hand, if you believe the likes of Apple, Microsoft, and Amazon will keep dominating the market, the QQQ offers a simple, liquid vehicle to invest alongside them. And if tech comes back into favor, the QQQ could be poised to outperform. As always, consider your own goals and risk tolerance before investing. Look beyond just that famous ticker and understand what you're really buying. I hope this look under the hood of the Invesco QQQ Trust helps you make an informed decision. Until next time, I'm Spooky and this is Shrouded Securities. Like you, we prefer to be compensated for our efforts. To this end, if you believe this information provided value, please like this video and subscribe. Stay spooky out there.